Hey everyone, welcome back. We're diving into some pretty complex business news today and breaking it down so you don't have to.
You got it. That's what we do best, right? Unpack it all so you can actually use this stuff.
Absolutely, and today we're focusing on Nike. They just released their fiscal third quarter results for 2025.
We've got their report right here, plus some hot takes from analysts. We're going to synthesize all that for you.
Yeah, mission is basically to figure out where does Nike stand right now? What's the health of their business?
Exactly.
All right, so first things first. Revenue down 9%, landing at $11.3 billion compared to this time last year.
Oof, not great.
And net income, that took an even bigger hit, down a full 32%, only $800 million.
Now that's a significant drop. And if you look at their gross profit margin, it's contracted as well, down to 41.5%.
So that's like a 3 percentage point decrease, right?
Yeah, exactly.
So, gotta ask, what's causing this squeeze on their margins?
Well, it's a few things, actually. They've had to offer more discounts to move products.
Made sense, yeah.
Then there's the whole inventory situation. They're having to set aside more money for stuff that just isn't selling.
Like reserves for obsolescence, that kind of thing.
Exactly. And on top of that, their production costs have increased, so that eats into profits as well. And then there's the whole channel mix shift.
Meaning?
You know, how much they're selling directly to consumers versus through other retailers.
Right.
That balance has tipped in a way that's less profitable for Nike right now.
Interesting. Now, let's break it down geographically. North America, they saw a 4% revenue dip.
Not insignificant.
But over in Greater China, sales plummeted a whole 17%.
Now that's a red flag right there.
Yeah, it is.
Yeah.
Big difference between those two regions. China has been like a huge growth area for them, right?
Absolutely. So that 17% drop really makes you think, is it just specific problems in China, or is it like wider economic trends hitting consumers?
Good question. Now, Nike's talking about this win now strategy to combat all of this. So what is that in a nutshell?
Basically, double down on what they do best. Intense focus on innovative products and really leveraging the power of their brand.
Through like sports partnerships, sponsorships, that kind of thing.
Exactly. Their CEO, Elliot Hill, he's actually pretty confident this approach will get consumers excited again.
Okay, but confidence is one thing. Their CFO, Matthew Friend, he's expecting these headwinds to stick around, at least for the next quarter.
Oh yeah, the outlook isn't rosy. They're actually predicting another revenue drop in Q4. Could be anywhere from like the low teens to mid-teens percentage-wise.
Ouch.
And their gross margin, yeah, that's expected to shrink even further. They're saying another 4 to 5 percentage points.
So analysts are understandably a little skittish.
Yeah, JP Morgan and UBS, they've both lowered their price targets for Nike. Not a good sign. Shows they're worried about earnings taking a hit.
And the stock market reacted too, right? Their share price dipped after the earnings announcement. Clearly, investors are nervous.
You bet. Investors are watching closely. They want to see if this win now strategy actually translates into, cold, hard cash.
So what's the plan? How do they turn things around?
Well, they're investing a lot in marketing, got to get the word out.
Yeah.
Pushing new product designs, of course, and trying to mend some fences with their wholesale partners.
So rebuild those relationships.
Right. But the thing is, they're not expecting a quick fix. They're saying this recovery will be gradual, probably extending through all of fiscal 2026.
That's a long road ahead. But here's a curious thing. Vogue Business reported that Nike's sales decline, though not good, actually wasn't as bad as some analysts predicted.
Interesting, right?
Like they beat expectations even though they were down 9%. So how do you read that?
Could be a couple of things. Maybe the market was bracing for even worse numbers. The bar was set really low. Or maybe, just maybe, some of their initial moves, those strategic adjustments, are starting to have a small positive effect.
So even within the overall decline, there might be some glimmers of hope.
Exactly. Could be some areas where they're doing better than feared, showing some resilience.
All right, so let's sum this up.
Big picture time.
Revenues and margins, both down. China's a big concern. And Nike's betting on their win now strategy, leaning on new products and brand power to stage a comeback.
But it's going to be a slow climb. The near future is still looking kind of shaky. But hey, they did manage to exceed those super low expectations, so there's that.
Yeah, it's a mixed bag, for sure. So here's the question for all of you listening. What do you think are the biggest hurdles Nike needs to clear to really get back on track?
Sure.
To get that growth engine humming again and win back investor confidence?
And what does win now actually look like when it comes to the stuff they put on the shelves, and how they connect with you, the consumer. Something to think about.
That's all the time we have for this deep dive, but thanks for joining us.
Catch you next time.